Hey traders, this is Brandon back with another video. Today's video I wanted to discuss what I believe is the most powerful strategy I have seen, and I have been obsessed with trying to find better and better strategies to utilize. And I want to give major props to Fairyland Strength, who actually, crazy enough, asked me or was talking to me about a situation in which I was actually looking into this as they were responding to me. They said, just a question, when you say you use the 9 EMA and vwap, does the crossover have any significance? Looking back at some of the entries, they always seem to coincide with the 9 EMA and vwap cross. That is insane, because that's literally what I've been doing the last few days, is kind of going back, and I wouldn't call it back testing, only because back testing tends to have a connotation of, you know, testing thousands of results. I'm only one person, so I haven't tested it in thousands, but I definitely have tested this over and over again, and I have almost always gotten the same results. So what I want to show you is I've made a quick strategy list, and if all of these are checked off before you enter a trade, this is a great opportunity. So the first thing we would look at is the stock gapping up? So if the stock is gapping up, easy enough, that's going to be on your watch list. Is there significant volume? So obviously we want to find stocks that are trading. I have my trade idea set to a minimum of 50,000 shares. You can obviously change that to something that you feel more comfortable with, but I probably wouldn't go much below that. So I have it set to 50,000 shares and above. I also, of course, want to make sure these are the keys. We want to make sure the price, or I should say the opposite, the 9 EMA is below the price and the VWAP is above the price, and I'll show you that. And then this is optional. This is something that I think has made it even more powerful, and I will show you this to see how mind-blowing the numbers are. Does the stock have options? If people aren't familiar with options trading, I'll be going into that in this video as well, just to give you a fair indication of what I'm talking about. So this is the basic checklist of what I'm looking for. So if I go over to my chart here, and these are I set this up for 9 a.m. today, and these were the stocks that were gapping up. And as you can see, you have stocks that were gapping up. INO 8%, you have 15%. So some of these, these were all gapping up, and then I also have the volume. So the volume, here's a stock that was gapping up 5 million shares, 700,000 shares. So these would all fit the criteria. And then all the way to the right, I have the options volume. I just want to make sure these stocks have options trading. Some stocks don't have options, so that's something that I take off my trade list. So here is a perfect example of what I'm looking to do. So the first thing that I do, and this may seem counterproductive, is normally you have your pre-market, and you can kind of see the pre-market and you can see the moving averages. So this kind of like blue here is what's called my 9 exponential moving average, and then this purple line is the VWAP, the volume weighted average price. This is super significant. So when you have the two of these, they can create a really powerful strategy. So the first thing that I do is I actually take off extended hours, so I don't show extended hours. And so what I'm looking for, my old strategy was basically where, again, I've discussed this in many videos, is basically you have a dip here and you buy the curve up. As it curves up, you can buy the dip. So that would have still worked. But I also wanted to understand the why behind the why. So why, after this curve up, did it drop again? And then why did it take off once it curved here? And I noticed that a lot, where it'll come up, drop, and then it'll just keep going. And I'll get a nice gain, but then I'll get stopped out on the rest. So I started playing around with different options here. And what I noticed is, by a couple of simple things, taking off extended hours, putting on the 9 EMA and the VWAP. And what you'll notice is, as you get the 9 EMA trailing and the VWAP, you get a crossover. When you get a crossover, you get a bullish move. And so as you can see, the stock went up here. And so generally though, I actually am looking to get in, based on speculation in this case, a little before the move. If I see that they're starting to get close, I'll get in before. So I'm looking for the first candle to make a new high. So on this, I've used the 1 minute, 2 minute, 3 minute, 4 minute, not 4 minute, and the 5 minute to find the best opportunity for this, and I came to the conclusion that the 3-minute candle setup is the best. The 5-minute tends to find the stocks a little too late, and the 1 minute, I would never use the 1 minute. I've discussed that in previous videos. The 2-minute also seems to work really well, but sometimes it's a little bit false. So I use the 3-minute, and this seems to work perfectly. It perfectly lines up. As you can see, as the 9 EMA comes up, you get a bounce right off the 9 EMA. You get and then what you can notice is as it breaks above this red candle, that's where I would enter. And as that happens, the 9 EMA also crosses over the vwap. So that would be right here. And so what this is telling me is this is extremely bullish. So now you have 2 layers of basically padding, if you will. So you have, here you have the 9 EMA acting as a momentum indicator. So it's going to continue to ride up, because the 9 EMA generally, if you were looking at a regular stock, like let me pull up a popular stock, like let's say Tesla's been crazy. You see the 9 EMA doesn't really have much. It goes up, it goes down. It doesn't really work on a regular stock, on a regular day, that is. But when you have these stocks that are in a momentum move where they're gapping up, the 9 EMA is used as like a momentum indicator, where you can see that it keeps trailing it all the way up. So my best indication would be to get in above. Once it bounces, you see the crossover is just even more signs that this is going to continue moving higher, and you basically can set your stop below the 9 EMA. And so if you would have set your stop below the 9 EMA, as it moves up, you just keep trailing your stop. And this thing went up, and then finally it crossed under here. So 144 is where it crossed under, and you could have got in at 138. So that's a $6 move. Now, the other thing that I would tell you, and this is why options are so powerful, is that, listen, I completely understand most people don't have the money when they're first starting out trading to buy 100 shares, 1,000 shares of this stock. That's where options come in. And I'm going to show you something that is insanely powerful. So in Thinkorswim, and this is for most platforms, would have the same options here. So if we go over to the trade tab, I'm going to pull up, these are the options chain. So it may look daunting to see, but all we really care about is these are the options chain. These are what's called the calls, and these are what's called the puts. The calls is basically saying stocks, you believe the stock is going to move higher, and the puts is where you basically believe the stock is going to move lower. So in this case, we see the crossover here, so we think the stock's going to move higher. So if you would have got in, let's say you would have waited for the crossover, and you would get in above these 2 candles, so that you would get in around 139. Okay, let's say 139, and you think it's going to go up to 141. Let's say $2. So here you can look, you can see that the strike price is the price that you think it's going to get at. Now in this stock, this is UPS. There's a 140, and then there's a 145 strike. So there's not anything in between. So if we were to purchase the calls of 140, so we're saying that the stock is going to go up to 140. So I'm going to take this, and I'm going to put this in here just to show you, because you can pull up a chart of that actual option. So the time was around 10:09 where you would have gotten in. So if we come over here and look at 10:09, this is the same pop. So if you look over to the right, it shows the amount. So it's around $100.70. So this is actually times 100, because when you buy an option, you're buying the equivalency of 100 shares. So this would have been $170 for one contract. And look how high it went. So we can check on the percentage. So if you would have bought in here, and obviously you're not going to sell at the top, but just to give you a really cool idea, you can see here on this blue box, it shows you the percentage. So it went up 270%. That is insane. So you put in $100, you would have made $270. And obviously, let's just say you would have sold at 50%. You would have made $50 on your $100. Now imagine on the flip side, if you bought $1,000 worth, you would have made $2,600 worth. So it can get pretty crazy. But this is why I think I'm going to be moving away from the lower price stocks and going to be moving more towards the options, which is essentially the same thing as a penny stock. You're actually investing in less. So on a penny stock, you may have to invest, $1,000, $2,000, $5,000. Whereas something like this, again, you can purchase one contract for $170. sell it, let's say halfway, sell it at $4, so you're up 127%. So $100, you would have made $127, which is pretty crazy. So that's how I like to use, or that's how I'm going to be using options to coincide with these powerful moves. And to kind of show you that this works each and every day, here's one UPS, so that worked on UPS. So we're going to go through all the stocks that gapped up today and to show you if they worked. Here's another one on SGMO. So here you can see price came up. Here's the 9 EMA trailing. There's the crossover right here. And so what I would have done is maybe got in a break above this candle, 1075. This is obvious. This doesn't move in such huge increments, so this only moved up quite a little, not as much. But again, this would have worked. Qualcomm is obviously a big company, so these are probably the best to use them on because these are solid companies. So if they're gapping up on good news, then that's a great opportunity to buy in. So this is another amazing example. As you can see, the stock gapped up, and then here we have it coming down. Where does it come down to? It comes right down to the 9 EMA. So this is where the crossover is. So I would speculate and get in a little early, seeing as it's rising. I would have gotten in above this red candle after it touched the 9 EMA twice. So I would have got in at 10 o'clock, right here at around 102. So I'm curious to see the options. Let's say at 102, let's say we bought the 104 option. So the 104 option, if we take that and chart that, and we would have got in at 10 o'clock. So 10 o'clock is right here. So as you can see on the right, you'll see the price. The price was around 93 or 92 cents. So that's the equivalent of $93. So it would have costed you $93, no joke, $93 to buy one contract. And how high did it go up? Let's say it went up 155%. Again, on $100, you would have made $154. $1,000, you would have made $1,154. I mean, it's pretty crazy. And the cool thing is, you can always just put a stop with options as well. If you buy an option contract and you're watching the stock itself, and what I would do is if I'm going to enter right here at the break of this red candle, my stop would be below the low of this candle. So it's a pretty tight stop as well. And you have the 9 EMA trailing. And as you can see, I would have rode it all the way up until it broke under right around here. So that's where you could sell. Obviously, you can do this in many different ways. You can buy, let's say 10. I mean, if it was only $92 to buy one, and you had $500 in your account, you could buy 5 contracts and maybe sell on the way up, and just keep 1 or 2 and just see how high it can go, and then maybe even take it into the following day. Here I expanded it. Maybe even hold 1 or 2 to see if it gaps up higher the next day. Keep in mind that the options that I play are the weekly options, so these expire every Friday. So that's a really awesome strategy that I think is something that can make you a ton of money. And here's another option. Here's another stock, excuse me. So as you can see, the old strategy that I would have used is I see this candle coming down. So there's a dip here. I would have maybe got in here, and that would have worked, but very slightly. The bigger play would have been, of course, here's the 9 EMA, and it carries the stock all the way up. Here's your 9 EMA cross, so you could have technically got in once it crosses, but I like to speculate and get in a little bit earlier so you get a better price. And then you can also set a tighter stop. And you get in at 66. This one went up to $75. I would love to see the options percentage on this. So let's say you would have got in here at 65, 66, excuse me. And I mean, no, you can maybe set a your option strike price at, let's say, $70. So if you would have got in at the 70, these probably went up an insane amount. So what time would we have gotten in on overstock? So we would have got in on this right here. Once I realized that it was the 9 EMA was carrying it up, it kept touching it, kept bouncing off, I would have got in on the break of this candle, or you could have got in on the break of this red candle. Either way, so this was at 954. So let's see the option prices at that same time. At 954, which would have been here, you're looking at around $1.60. So that's $160 a contract, and it went up to $9.50. That's almost a 500% gain. Again, just to do simple math, you have $100 worth, you would have made $500. Obviously, you're not going to take the entire move, but let's say you take half of that, you take 250%. You just made $250 on $100. So you don't need a lot of money to do this strategy, especially if you're playing it with options. Obviously, if you don't feel comfortable, you're not fully understanding of options, and you wanted to play the stock itself, you may need some more money because this stock, $67 stock, you would need some money to invest in that stock. But this seems to be working so well. Here's a perfect example of one that wouldn't have worked and we would have never got in, because what you notice is it kind of was choppy here, and we did see the 90 EMA rising. So I would have looked to get in as it touched the 90 EMA. I would have looked to get in above these two candles, but if you notice, it rejected the vwap and then crashed. And the funny thing is once it goes under the 90 EMA, you can technically short that and feel confident, but that's not the strategy that I'm using right now, and I would recommend that. But you can see that it never actually went above this candle, and so that was one that was invalid, and it wouldn't have worked. So this is a strategy that I think works really well, the 90 EMA cross. Again, going back to the checklist, is it gapping up? So again, we're looking for stocks that are gapping up. We're looking for significant volume. We're looking for the 90 EMA to be below the price so that it can carry the price upwards in an upwards momentum. We're looking for the VWAP to be below the price. I'm sorry, the VWAP to be above the price. And then just optional, does the stock have options? That way you can purchase the options and get a huge percentage gain on that. So stocks gapping up, 90 EMA is below the price, the VWAP is above the price, and then this stock has options, and so that would have been a perfect entry. So I'm going to start making some more videos on these, some of my live trades, that way you can see those and see how they work out. So if you have any questions, any comments, feel free to reach out, like, subscribe. Definitely will be making more videos. I'm super excited about this opportunity that I seem to have found in a weird coincidence. Yeah, take care, have a great day.